And next, we're going to go over what an out of the money option is. So, out of the money options are the main trades that we do at Theta Traders. Bank of America stock right now is at $34.09. The strike prices is the prices for puts that you're going to buy a certain price. So, if you're right at $34, this is called at the money, pretty much about 9 cents from at the money. If you go further lower, these would be called out of the money options because they're not currently worth anything, and especially if it expires higher than that price in a put option. Okay. So right now, if it's at 34.09, let's say you sold a $28 strike price, you received $31 in premium. Right now, it would have to go from 34.09 all the way down to $28 before the days to expiration end. So in this case, it would have to move about 4 plus 2, about $6 in order for this option to be then in the money. So out of the money for puts is always a lower price than the current price. If you do have call side, it'll be the opposite. Out of the money and a call side will be a higher strike price than the current price.